Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number, and if you pick it up and give us a call, I tell you this every week. Pick up the phone, give us a call, and we'll get you on the radio. Chances are that's not going to happen, but I have noticed, and this is what I've noticed in the last 6 weeks, people have been calling me about questions that they have about either a guest or maybe a program that we've talked about, so I know that repeating the phone number is a good idea. So here it is again, 888-713-2929. That's our telephone number. If you write it down and have questions after you hear the guests on the show, and we got 3 good ones today, as well as anything I might say, write down the number, call us later, ask a question, ask me to introduce you to one of the guests, and I'm happy to do that, happy to help you in any way we can. The show is more about trying to bring education and information to you rather than promote me, and I hope that is the emphasis of what we're trying to do here, as well as how you receive the information. We have great information here. A lot of people on most of these shows just want to promote whatever the company they're working for or whoever they're trying to promote in that particular moment. We, as I say, bring people from not only the great company that sponsors the show, Malibu Funding, Inc., and thank you to those people, but also from other lenders, from other walks of life in terms of what we do here in the mortgage industry. We bring real estate agents on. We had a couple of great ones in the last couple of weeks. So if you're out there and you're wondering what the show is and you've never heard us before, give us an hour. Sit down, listen to what we have, or you can just go to the great stations that we broadcast on, K-Tahoe, KCAA, and KMET, in the Inland Empire and up in Northern California and Nevada. We try to, like I say, bring those great stations some great radio, broadcast radio, and in doing so, hope to educate you on the ins and outs of what's going on in the mortgage business. So in the rates today, let's talk a little bit about rates, because we have seen over the past 2 weeks a little bit of a change, not a little bit of a change, kind of a lot of a change, and hopefully it's a sea change, meaning that we're going to see greater inventories, lower prices on real estate, and lower interest rates. This is what's been happening in the last 10 days to 2 weeks. We touched on it somewhat last week, but this week we've seen a larger trend across a greater swath of the country, as well as in our own little neck of the woods. Although, short term, right now, we're going to talk about 30-year fixed rates at 4.625 to 4.75%. I think that's a bit of an uptick from last week. But what we're seeing in terms of me saying, hey, you know what, interest rates are going down, is that the trend towards rising interest rates is coming to an end. The trend towards lower real estate prices is actually coming up. We're seeing on Zillow a greater percentage of properties who are lowering prices right now. Now, everyone knows September comes around, school's in session. Anybody that was going to move in order to get the kids in a new school, that's done. So your kids are in school. So the pool of buyers, the pool of people who need to move is really shrunk. And so we get greater price reductions in September, October, November, obviously around the holidays, November, December, and January. And why do I say that is because most people, they're not interested in selling their house right then. It's the holidays. But you can get better deals if you're a buyer between now and January than you can, obviously, between May and August. And obviously speaking, these buyer seasons and seller seasons are really well defined in our industry. You find some outliers in some areas that may not reflect that respectively, but if you're looking for a better deal right now and you're out there as a buyer, you can actually see better prices on real estate now than you did 3 weeks ago, a month ago. And if you're still in the market, and hopefully you are, we're going to look at a couple of segments in the marketplace, baby boomers, millennials, Gen Xers, Gen Yers, who are really making up the entire purchase market for real estate. We'll take a look at those and come to some ideas or some conclusions as to who's buying, who isn't buying, why they're not buying, and then look at what ways we in the profession try to entice or lure people back to the marketplace. But we'll get into that in our last segment. But FHA, VA loans are currently 4.25% to 4.5%. And understand, with a FHA loan, that particular loan comes, you only have to bring in 3.5%. That's the big, great thing about FHA loans. They're insured, meaning that you insure them. Obviously, that rate I just quote is a average of rates around the U.S. So if you, in fact, are looking at that particular product, just understand that you're also going to have to pay mortgage insurance, which is probably a point above that, 3/4 to a point above that, depending on exactly where you are, what county you live in. This show is broadcast in San Bernardino, Riverside, and upstate California. I sound like I'm from New York. Anyway, it's up in the Tahoe area, so we're really happy that those great areas are listening to the show and be able to participate. Let's look at 15-year fixed, 4.125%. That's still a pretty good rate. I mean, think about it, 4.125% for a 15-year fixed. It's good. If you have it in your mind to be able to, get in and out, and you have the wherewithal to pay a higher mortgage, the lower rate is obviously going to save you a ton of dough. And over 15 years, probably save you, maybe $100,000. So if you have that in mind and you want to do that, or let's say you want to, get out of the house much quicker, 3 to 5 years, 7 years. Look at the ARM products, because the ARM products, the 5-year ARMs, 3.75 to 4.25%. This is the average across the country, and that's the range that we're going for. That's pretty good. Those are pretty good rates. Even though we have seen trending upwards, we are now starting to see a downward tick in the rates, in the long-term projected yields on mortgage-backed securities, and given that it's an inverse reflection on rates, we should see rates not only come down a little bit, but possibly stay down for a while. There's a lot of different reasons for that. But mortgage interest rates, that's one of the number one reasons why people cannot afford and have gotten out of the real estate market. So if you're out there and you're thinking about it, prices are coming down. Look at Zillow. If you haven't got a real estate agent and you don't want one right yet because real estate agents, they need to eat and they want to get you into a house, and there can be a lot of pressure. But let's say you don't like pressure, and I know there's great many segments of the buying population that do not like to talk to people. Rocket Mortgage comes to my mind in terms of the product that will be able to get you not talking to anybody, but into a mortgage. Now, there are some real estate companies, Zillow being one of them. Now, one thing about Zillow, and it's a little bit irritating. Zillow buys information from all the MLSs around the country, right? They have a deal, whatever the deal is, Zillow gets your information. Realtor.com gets your information, and Trujillo and a number of Redfin and a number of other sites. But the big two are Zillow and Realtor.com. They buy information or they trade in information so that they can put as active a listing as possible and with the most accurate information as possible on their site to attract people to come there and either compare property prices or obviously look for a property themselves, or perhaps a realtor or perhaps a mortgage broker. Well, what they've started to do, and they're doing a little bit in Las Vegas, Nevada right now, is they're actually buying homes and flipping them. So you're thinking, well, what? How does that work? Exactly. If you're a realtor out there and you're listening to my show, you're not going to like that at all. Zillow has all the listings, and now they want all the buyers. Well, they're test marketing this program. There's 6 of them currently out in the Las Vegas area with which they're testing this, and in so doing are signaling that, they're not comfortable with just suggesting that you use a realtor and charging the realtor for that privilege, or suggesting that you're using a mortgage broker and charging the mortgage broker for that privilege. They want to get in on the commission. They want to get in on the action, and they're doing it currently in Las Vegas, and they're flipping houses. They're buying the houses. Zillow, I guess it's Zillow Real Estate, because you need a license, right? Anyway, so if you're out there right now, there is a bit of a conflict of interest in terms of what Zillow is doing and how they're presenting the information. We're going to see how it shakes out. I'm not quite sure how it will. I'm not happy about it, and I wanted to inform you that. Best thing to do is to go to the MLS directly, find a realtor, somebody in your area that you like and trust, get a recommendation from a friend, and go to work with that person, because they're the ones who are going to look out for your best interest, as opposed to also trying to list every property on their website and make money from other realtors who are advertising. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number. Pick up the phone and give us a call. Really would like to hear from you, if not now, later. If you hear anything on the show that you want to talk about, or you want to get introduced to the people who are guests on the show, be my pleasure. We bring to the show many, many different types of people, and one of the persons that we bring on the show when we talk about different forms of online or what they call social marketing, and I don't even know if that's a correct term anymore, is Debbie Harris from Pi Media, and once again she joins us. Debbie, how are you?
I'm awesome, Jeff. Thanks for having me again.
Okay, and thank you very much. We were talking off air about Facebook's new application about some form of engagement. Could you give us a little idea what that is?
Sure, I'd be happy to.
Okay.
Facebook is going to be testing on a limited basis. What they're trying to do is get people to engage more
with
each other. And of course, if you own a business and you're using it, you want more and more engagement. So what they're trying to do is, you leave a comment on someone's Facebook post.
Right.
Let's say Susie leaves a comment and then Sam leaves a comment. If Susie and Sam have a commonality, Facebook's going to put a little red words above the comment. For example, let's say you both live in Nebraska, or let's say you both went to the same university. They're going to let you know if people that are commenting on the same post have a commonality with you. Their feeling is that if you see that someone has something in common with you, you might then connect with that person and start another whole engagement. So that's something that they are going to be testing.
Okay, what's the idea behind that? Obviously, Facebook is trying to change a little bit of what they're doing and how they do it. Isn't this a little bit of looking behind the door, seeing what you are, and then behind their door, seeing what they are, and then trying to match them? Isn't that what they're trying to get away from, or does it matter?
A great question, Jeff, because that's exactly what some of the pros and cons are of the research I've been reading on it. You know, the whole idea of the retargeting that we've all pretty much become used to, where we go on our computer, we look at an ad, and lo and behold, we open Facebook, and there's the same ad. And it kind of follows us around. And at the beginning, it was very creepy for people, including myself. Now it's more of an annoyance because I see it, and I'm like, oh, here we go. So it's kind of the same thing, but by the same token, we like the commonality. I mean, if I see that somebody, likes my favorite restaurant, I may actually say something to that person like, hey, Sue, I was there last week. When were you there? Again, fostering these commonalities so that people will engage. But again, that's why they're testing it, because the flip side is, wait a minute, this whole idea of privacy and this whole idea of sharing information, now you're telling people who, just because I live in Phoenix, I don't necessarily want Sam to know I live in Phoenix. I'm not even connected to Sam.
Right. He just made a comment she just made a comment, and all of a sudden now they know I live in Phoenix. Why are you doing that? Right, I see what you're saying.
Right.
You would probably have to opt into one of these things, right? Like, I think this is a good idea. And obviously businesses would want to do it, but I don't know if a lot of individuals would want to do it. As a matter of fact, I'm not even sure, if, how do you, I don't know. There's a lot of questions to it, right?
And from a business standpoint, it's a little different because you're putting comments on a business page.
Right.
If you're commenting, it's going to get a little bit more because, again, if someone were to say, oh, I love this place, I go there all the time, and let's say you're on XYZ Restaurants page,
Right.
and someone else underneath says, yeah, I was there last week, and now these two people find out that they have some other thing in common. Maybe they both have golden retrievers. I don't know.
Right. No, that's what it is. That's what happens. It's some obscure thing. Right.
Exactly. And certain things will bring people together. For example, if they're veterans,
right.
They've both been in the Army, if they went to the same school.
Right.
So we'll have to see how it, and I'm sure you're right, I'm sure it will either be an opt-in or an opt-out.
Mm-hmm. But
clearly with all the issues they're going through on privacy, they need to make sure that people can just say, no, I'm not interested in that.
Yeah, I think a lot of this is really, a train that's left the station in terms of privacy. I just don't think it exists.
To use another analogy, that ship has sailed.
Yes, that's exactly. I think you gave that up. You sign in and you're on Facebook, it's done. Or you're on any of these social medias. I want to ask a little bit about it. This is Debbie Harris from Pi Media. You were talking also about some workforce development. For instance, I'm in the mortgage business. We're always looking for good and talented loan officers or even some specific positions within our field. What are you all doing in order to, I guess, facilitate people who need that? Because in the social media world, I mean, how do you, other than go to like a Monster or some other, job site, how do you do that?
Well, and thanks for bringing that up, Jeff. It's becoming more and more of a specialty of what we do here. Mm-hmm. If you're looking for people, let's take your example of mortgage company. LinkedIn is still going to be your number one platform for mm-hmm. finding professionals. However, and we do that. There's a job function on LinkedIn. It's very effective. You pay for it, and then of course you can also do free posting and things like that. However, people are all over Facebook. They're all over Instagram. They're on Twitter. They're on Pinterest, depending on what you're looking for. And remember, you cannot in any way, shape, or form even imply discrimination. And what I mean by that is, if you put a post up on Facebook and you want to boost it, and remember, we've talked about this before, you want to spend, let's say, $100 to get that post out there. You must choose 18 to 65. You must choose male and female. Mm-hmm. You cannot put different kinds of demographics.
In your filter, okay. Yeah.
In your filter. However, you're now reaching maybe, 10,000 people, 12,000 people in a certain area. And it works because people are on these things all day long. Mm-hmm. So now they're scrolling their news feed, and they see that you're looking for a mortgage person, a loan person, and they're like, yeah, I'll give them a call on Monday or Tuesday. I'll give them a call. I'll send my resume. I'll check out the company. Because you have to be where people are, and mm-hmm. that's where people are.
It's like when you're at the beach, you see those planes that drag the sign behind them. That's what you're talking about. That's where the people are. You got to bring the advertising to where the people are.
That's exactly it. Or remember the skywriting?
Yeah, same thing. Exactly. I haven't seen a skywriter.
Coppertone.
Right.
Hey,
Coppertone.
We all grew up looking at the Coppertone thing with the girl being dragged by, the little girl.
Yes, exactly, with the dog grabbing her suit or whatever the heck that was. Yeah. And nowadays, the dog would be in jail and it'd be, somebody'd be arrested. It's just.
But you hit the nail on the head. It's exactly right. Everybody's at the beach. You got to drive. You got to have it go by the beach, just like the blimp over a huge sporting event. So absolutely, it's the same idea. People are on these things hours and hours and hours.
So quickly, tell us what Pi Media does. We only got about a minute and a half left, and I want to make sure we get people to know who you are and how to get a hold of you.
Okay, we're a digital marketing company.
Right.
You can reach us at 702-720-6560. I'm Debbie Harris, and again, it's PIMEDIA.me is our website. Anything in the digital world, so your social media, your email marketing, your WordPress websites, your SEO, your content writing, your blogs, whatever it is in the digital world, we have great success with small and medium-sized clients.
Yeah, and I've used Debbie. As a matter of fact, that's how I met her when she helped me set up my LinkedIn profile. And yeah, it's really good. I enjoy the interaction and also learning about it, but also I'm getting results. So all that is really positive for me. So if you're out there and you're listening, she's the one to give it a call. Debbie, thank you very much for coming on the show once again.
Thank you, Jeff. I appreciate it.
And I appreciate you very much, and have a terrific holiday weekend.
Thanks, you too.
Of
Bye.
course, and I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's a telephone number. Pick up the phone and give us a call. If you'd like to email us, info@malibufunding.net. And, of course, I have a blog, bartonblog.net, and I'm on YouTube. By the way, this show is shot for YouTube, so if you want to see me and a great picture of our guests who are on the show, you can go to YouTube, and you can dial up, what is it, Daryl?
Jeff Barton, the Real Estate Voice.
The Real Estate Voice. Thank you very much. And there's close to 100 shows on there, so you can get to see and feel and see all kinds of different people on the show who you may not know, but have great information. One of these people who's been on the show and has, gracious enough to come back again today is Connie Hernandez. She's with PMA, and I really appreciate you coming back. Thanks, Connie.
Well, thank you, Jeff, for having me.
Okay. Changes in the market. What's happening out there?
As far as what's going on with the buyers or the refi market?
Well, either. And I'm talking specifically about maybe the prices have stopped escalating so much and maybe the mortgage rates are starting to come down a little bit. What do you feel about all that?
Well, I mean, I'm seeing the mortgage rates are pretty much about the same. I haven't really seen too much of a dip where it's going to make a drastic difference where people are going to go and review their current loan status and see if they are ready to refi again. Although maybe those that thought that it was going to get better and never did take that moment to refi, they might consider it now.
Right.
But you're absolutely right. I'm not seeing the prices go up too much anymore. And as a matter of fact, in certain areas, they've taken just a bit of a dip. What do you think?
Yeah, I agree with you. And I think that's good news for people who are buying. Of course, where did all the buyers go? Some of them have disappeared as well. We were talking and going to be talking a little bit about how different segments of the buyer group, whether they're millennials or Gen Xers or even baby boomers, and how their different patterns are affecting the market overall. What do you see yourself?
Well, I think, to be quite honest, what I'm hearing quite a bit is people are just waiting. I think there's I don't really want to use harsh words like misconceptions, but I think there's misconceptions that we're going to have a huge crash again sometime soon. So I think that, advice from people that feel that they know the markets and possibly are not in the markets are giving advice to some of our younger buyers thinking that if they wait, they're going to get that fantastic deal. And you and I both know that's not likely to happen.
Well, you know what real estate is. I mean, you get in at any place in any market. You just have to be able to make sure that you're buying right and you can afford it. Usually, if you're there for the long term, a 20-year loan or a 30-year loan are going to guarantee that you're building equity in your home. And that's the way a lot of people have built wealth over the years. This current generation, I guess, is a little skeptical of that just because of the nature of the cynicism out there in the world, not only at the political level, but in all aspects of life, given Facebook and Twitter and Instagram and Snapchat. It's just, it's difficult to make long-term commitments for these current buyers, the younger buyers, don't you think?
I agree. You're absolutely right about the long-term commitments. The way the markets are now and jobs are just so much more flexible than they were when, our generations were buying. We were buying because we were at a steady job and we planned on staying at that job for, 8 to 10 years, if not, longer than that.
That's right.
Where now markets, you have the ability, because of the way we do business now, that you have the flexibility of working from your laptop.
Right.
So,
Well, that also says that you don't have the, the office cooler. You don't have the friends that you developed at work. You don't have really a commitment to the office because really, who do you know if you're working from home or you have flex hours and you come and go as you please because you do have the ability to work online. I just think it's a different market and attracting those type of buyers. How do you do it? How do you get to these people who are traditionally were easy to get to because they were coming to you?
Well, I feel very fortunate, Jeff, and I feel probably you're in the same situation that I am. I've been in this business over 20 years, and the market has allowed for the, sorry to say this because I know I'm really aging myself, but I'm actually working with a lot of referrals from people that I sold homes to. Their kids, their
right.
The younger generations and their families, that's how most of my referrals are coming to me, and that's basically because, in this business, it's all about service.
Right, and tell people who are listening who haven't heard you before on the show where your office is and the areas you serve.
Well, pretty much we serve the Inland Empire, the San Gabriel Valley, and parts of Orange County as well. We're in downtown Covina, right on Badillo and Citrus, 101 North Citrus, and we're here to help anyone who has any questions or looking to purchase a home, list a home, or refinance their home. We're more than happy to answer their questions.
Now, the LA County Fair just opened, right?
Yes.
Okay. Do you go every year?
I can't say that I do,
okay.
But I have been.
Right. No, because this is the big kickoff for a lot of county fairs is Labor Day or just before or just after. So my feeling, I went to the county fair, I don't know, long time ago, over 20 years ago. I enjoyed it. I like it. Do you find that events this time of year, bringing people together is community building, or is it just something to do because you got a long weekend to do? The reason I ask is because every community wants to build some solid center, whether it's Las Vegas, Nevada, or, Covina. And in so doing, bring a cohesiveness and sort of a strength to the neighborhood, which only builds real estate values. So what are your thoughts?
Well, I want to agree with that. Obviously, the Pomona Fair, Orange County Fair, those are a lot bigger venues. But
right.
I think because I am what I consider a very unique, and I love where I have my office, it's downtown Covina. It's
right.
an older part of Covina, and like many cities, like you have Monrovia, you have Baldwin Park, many of the cities are doing what they call are either, they block off streets and they call
right.
it, Friday night, a street market, or they'll have concerts.
I love that. Yep.
And I think that those are positive things for the community because otherwise especially with technology now is we don't get out much, and I think that's a really good way to get to know your neighbors and friends.
Yeah, we have a little fair that they do every year at this weekend in our town, and it brings everybody out. And, of course, what happens is that everybody who is an adult over 21 gravitates to the beer tent, and all the kids who are under 21 go on all the rides, and which is, I don't know whether that's community building, but that seems to be what this event has happened. But I do like it. I like the fact that people get out there. Do you visit these things as a company, or do you do anything promoting?
Well, actually, I'm glad you mentioned that because we are trying to be more proactive in our
Great.
community, and we do participate. Like, for example, downtown Covina has what they call is the wine tasting night, and then they also have art gallery night. And then, so
Great.
Those are really nice events where we stay open late, and we open up our doors, kind of sort of like an open house, but with wine. So.
Oh, yeah, no, open house with wine always works. I know.
It does.
Traipsing around with the kids at Halloween, all the houses we went to had that same promotion. Candy with wine. Here you go.
Right.
It was just great.
Yeah,
okay, so where do you see the market heading in terms of rates? And do you think that, you had talked about crash. I don't think there's a crash heading our way. I think the economy's too good, and, the loans are also good.
No, I agree with you 100%. I think that the rates may creep up a little bit, but not too much where it would really hurt anything. And I really think that if people are hesitant in purchasing, it's pretty much what you said, Jeff. If you're in it as a long-term investment, if this is going to be your home, and it makes sense for you to be purchasing a home rather than purchasing someone else's home and increasing their assets, then I think you really need to look at your own personal finances, where you're at, and make a
Right.
smart financial decision for yourself.
Right, make an adult decision, because I know many younger kids don't like making adult decisions, right? I mean, they just don't.
When you say younger, do you mean like 30-something?
Yeah, under 40, right,
Younger.
exactly. Hey, Connie, could you shout out your phone number for us just so that we can make sure people who are listening to the show will be able to get in touch with you?
Absolutely. My office number is 626-918-2419, and my direct number is 626-422-2017.
Connie, thank you very much. This is Connie Hernandez from PMA, and I really appreciate you coming on the show.
Thank you, Jeff.
And thank you very much. And I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
To the Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's a telephone number. If you pick up the phone and give us a call, you can reach me. And if you want to reach me, but not right now, write down the phone number and give us a call later. We bring great guests to the show. We have great topics. The information is terrific. And, of course, I'm the one saying all this, and it's my show, so that's why I know it. Small joke. Sorry about that. Listen. If you have questions on your mortgage, your current mortgage, if you need capital in order to grow a business, if you need some business advice or business loans, guess what? The next guest I have for you will help you be able to solve some of those problems. It's Reed Blake from Business Capital Experts. Been on the show before, been on the TV show in Vegas too many times, and I really appreciate him once again coming on the show to give us a hand. Reed, how are you?
I'm doing very well. Thank you, Jeff.
And thank you. I'm great. Thank you very much. It's holiday weekend. Things are winding down, but then again winding up, right? What does this time of year bring to your company in terms of, I guess, need from businesses? Because business is cyclical like everything else.
Yeah, it's interesting. We're fairly level as a general rule, but there's always a little spike for business coming in for funding right before the beginning of each quarter.
Okay.
So in September, we'll start to see a spike in the volume of business for business owners who are trying to get, fourth quarter taken care of, those kinds of things. And then secondly, we have a lot of third parties, seminar companies, et cetera, that send their students to us. And so they pick back up again in the fall. So September, October are busy months for them, and they become busy months for us.
Okay, give us your 60-second to 2-minute description of who you are and what you do. You and I know what you do, but I think some of the new-time listeners to the show would really be interested.
You bet. What we do basically is we help small business owners, again, just like you, just like the listeners, acquire massive amounts of operating capital, unsecured cash. And we do this without them having to give up any equity in their firm. And so what we do is we focus initially with our clients on unsecured cash-based business lines of credit, a line that they can, has a limit. They draw down, pay back, draw down, pay back, draw down, pay back.
Right.
We call forever money. They can use it as often as they want. Turn it just like a hedge fund or capital fund would turn their capital. The second area that we have a lot of follow-up or following on is unsecured cash loans. So again, these are cash loans, unsecured. They range from $60,000 to $350,000, and again, they're unsecured. And those are the two areas that we have just a ton of people coming to us to obtain. And then over and above that, we do all your fixed asset stuff. We do portfolio lending. We do real estate from $10K to $40 million, residential, industrial, commercial. We've done everything from trucking companies and restaurants to
right.
Yoga studios and bikini coffee shops. So
very nice. Where's that bikini coffee shop? I need to know where
that's up in. Yeah, that's up in Seattle.
Oh, it's going to be kind of cold, isn't it? I like the idea, but geesh, I'll be freezing. Anyway, so it's a really interesting business that you're in. Do you see it growing today more than you did 2-3 years ago?
Yes. The volume of business is going up significantly. Number one, because the funding community, the greater funding community is now focused on the small business owner, home office, small office business owner. Whereas historically they haven't. It's always been, larger companies, mid-sized companies, et cetera. Now they recognize that there's just this, millions of businesses like this. So number one, the funding sources. Number two, small business owners for the first time are becoming aware that they can have access to this kind of operating capital. They've always assumed it was only applied for larger businesses,
right?
Because based upon their historical experience, just being throwing some stats out there, 97% of small business owners, when applying for funding, and remember, Jeff, this is in their EIN, not their Social Security number,
right?
Tied to are turned down about 100% of the time, and we have just the opposite. Our clients, 100% of our clients, sooner or later get the funding. We put them on a 2-year game plan,
right?
And we crush it. Yeah, we absolutely crush it for our clients.
Hey, so when you get a business loan on your EIN number, are you personally guaranteeing that loan as well?
Yes.
Okay.
Let me
That's typical.
Most of the time, yes. Initially, for a business that has no track record or history,
of course,
in the business credit bureaus showing that they've had them in the past and they've maintained and monitored them in the past. Over the course of the 2 years, it goes from the client being in play and doing a PG to where it's all being based upon the success of the company. Generally speaking, our clients at the end of 2 years will have somewhere between $500,000 and $2 million of this. But again, in the short run, whatever that short run definition is, they will have to do it. So in other words, if their business fails to make the payments or pay back the funds, then they become personally responsible for it. But unlike taking out a personal loan or a personal credit card or whatever the case may be, that's being reflected on their personal credit report, none of this money is. They could have $1 million of this stuff and not one nickel of it is reported in their personal credit report. Not a nickel.
Okay, let's turn a little bit to the business itself. Let's say you are a person and you own a store, whatever it is, or you have an online business and you're thinking, what, if I had X amount of dollars, I could probably grow this thing, but I don't really have a business plan, but I do have an idea. I've been successful at it. I'm sure I can replicate it or do something very similar to this and grow my business. What do you do in terms of your own company to assist companies in either business planning, or do you do any of that in terms of trying to help them identify how they can grow their business in a written form so that then they can use that to get money from you all?
Yeah, two answers. The A part of the answer is initially in that SOHO space for the unsecured cash-based business lines of credit, they don't need to have that business plan.
Okay, that's good.
In the first 1 or 2 rounds. Over time, and depending upon the amount of monies that they want and the purposing of the monies, a business plan comes into play.
Right.
So we facilitate that, but it's not required initially, if that makes sense.
Yes, of course. Yeah, no, it sounds like you're with them hand in hand through the growth of the business, and obviously protecting yourself is in your self-interest, but it certainly helps the business owner if you're going to be there in order to help them, either get a business plan together or at least aid them in their desire to find one.
We step up. Yeah, we step up and help him. If a business plan is required, great. If we need to help them move from being a sole proprietorship to an LLC,
right,
we facilitate the entity formation. Yeah, we're there to guide them. I mean, they're assigned an account executive, and that account executive works with them, sort of the liaison between the firm and the client over 24 months.
Okay, so you've been traveling.
Produce the results.
You've been traveling, obviously, and you pitch these, no, you don't pitch, but you certainly explain what your company does to businesses all over. And where have you been recently?
Oh, yeah. Last little while we've done L.A., we've done Chicago, we did Atlanta, we've been in, obviously, Las Vegas. We do a lot in Las Vegas because there's so many workshops and conventions and seminars that come here. Salt Lake City, San Diego. Yeah.
Great. Excellent. And how do people get in touch with you if they're looking to get some business funding?
Excellent. Yeah. The phone number, it's a toll-free number, is 844-980-8800. Again, 844-980-8800. And the extension to reach me directly would be 802. Again, that's 802. The firm is Business Capital Experts, and again, they can reach me at Reed with 2 E's, none of that EI stuff, Reed at businesscapitalexperts.com.
You know what?
At businesscapitalexperts.com.
Excellent. Now, a couple of quick questions before we close out the interview. Where do you see the economy going? Because obviously your business is tied directly to growth. Growth meaning that the entire country is growing. Individual business sectors are growing. Where do you see this heading? This is where you really have your expertise.
Well, overall, we're like everybody else. Everything is, we see it very positively. Most of the indicators look good.
Mm-hmm.
We always get a little worried about real estate, and if not that we think it's bubbling, but there might be some markets that are. We fund a lot of that. Overall, we're very optimistic, very positive right now for the next 12 to 36 months.
Okay.
In our industry, the only thing that really changes are the underwriting guidelines. If economies kind of go south, then you start to see underwriting guidelines tightening. And right now, we're not seeing any of that.
Reed, thank you very much for coming on the show. Really appreciate it. Always great information, and we'll talk soon.
Thank you very much, Jeff. It's been a pleasure.
Thanks, Reed, very much. That's Reed Blake from Business Capital Experts. I'm Jeff Barton, your host for the Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our phone number. Pick up the phone, give us a call. Email address, info@malibufunding.net. Make sure you put .net down there, or you'll never ever see us, and you'll be on somebody else's site. By the way, Daryl, I want to ask you a question. You ever had a domain name that got stolen from you?
Yep, absolutely.
Okay, so I recently I've had this blog, right, for a number of years, and it was bartonblog.com, right? So when it expires, and for some reason I didn't see it or whatever, the actual domain holder takes it back. And then when you go to the domain...
Network Solutions.
Network Solutions. Let's say Network Solutions or GoDaddy or any of these companies. And then when you go to see, oh my gosh, I forgot to renew, they want to charge you $6,500, I think this one was $6,800 to get the name back.
Because they know how much it means to you.
Yeah, well... So anyway,
it doesn't mean that much.
Doesn't mean that much. I'm telling you.
Now that there's .tv
exactly.
and .eat me is what I would tell them. Yeah.
Well, that's exactly what I told them. So recently, and this happened probably 7-8 months ago. So they sent me another email that says, "Hey, you can buy this domain for $600," and I'm thinking, okay, I've got it now where it's bartonblog.net. Do I really need my bartonblog.com back for $600, or do I wait them out till it's $60 or $5 or whatever it is? Because now I don't need them anymore.
Well, it depends. I mean, if you were a mega corp and you had it on every piece of stationery and every business card and you were across the country, yeah, the opportunity cost of, switching it or not switching it, it may become worth it. But, if it's an easy change...
Well, if it's me,
wait about
4 or 5 people read the blog, right, a month. So is it really that important? No. But I just think that some of these companies, and I was mentioning Zillow, right? Zillow's another one of these companies that was in one particular, business. They were aggregating listings across the country in order to drive people to their site to see the listings and to price their own house, but also to sell zip codes to real estate agents 2 or 3 at a time per zip code to make money. Now they're in the space of flipping houses. It just aggravates me when they do that.
Yeah, and they had space on the side. They had sidebars where real estate agents would purchase.
That's what I'm saying. Yeah,
places for their ads.
Right,
yeah.
And it's just so. And I understand that. The need to create something so that you can make money. Yeah, I get it. Zillow spent billions of dollars putting this site together, and now how are they going to make it work?
Right, but they weren't wearing a pirate suit when they came into the business, and now they are.
Now they are. And I think Debbie Harris was talking about Facebook, and what did you think about that in terms of Facebook putting you and the guy that makes the comment on your site together because they're going to flag that you're both from Phoenix, let's say.
If you were part of the same subscriber group, and if you had given permission to opt into something like that, yeah. But if you're not acknowledged as friends, and they're going to put two people together that don't know each other and have nothing in common. Right. Other than they both live in Phoenix was the example, right?
Yeah, that's
and
right.
they don't know each other. First of all, I don't want somebody that I don't know knowing where I live.
Well, how would they do it? Would it be private? Would it be just so that one person saw it because they were flagging a particular, or they were, what did she say, have a red word above it or something?
That sounds it's creepy.
Well, it's really creepy because it once again shows that the information that you have is being marketed. Constantly, never ending, whether you want it or not, it's going to happen.
I think there's some better things that they could do with their time. First of all, there's some sort of algorithm that if you don't constantly communicate with certain people when you send out things on Facebook, it's only going to like 25 of the people that you communicate with most recently. Right. It's not going. I've got like 2,500 or 3,000 Facebook friends.
Right.
And what I'm being told now is, when I post something, it's only going to like 25 people.
No, because they want you to boost it. They want you to boost it.
To pay to get to all of your contacts.
That's correct.
Which is, work on that, Mr. Zuckerberg.
I don't know. The whole, the government's doing it, right? Know that their particular NSA or the FBI or whoever's looking at you, because we don't even know all the letters that are involved in spying on U.S. citizens, they're doing it. But businesses, man, it's just, I don't know.
This is way beyond Big Brother.
This is way beyond Big Brother. Way beyond. Well, you're just a product. You are just something that is, as you said, algorithm, which, again, is just a mathematical formula which sorts things in a particular way to be able to use with a different sorting method from something else to put things together and then come to you and say, hey,
look at this.
Yeah, look at this. This is good. I remember when we first had, I had Google Glass. Did you ever have that?
Yeah.
The glasses that you would wear. So I bought them because I was always interested in technology when it comes out, just to see what it is. It wasn't cheap. I did it through the business to see if this was something that, well, first of all, it didn't work.
Well, Dick Tracy had them, so
it didn't work. It was cumbersome. Yeah. People who saw you wearing a camera on your head,
thought you were a geek.
Yeah, well, not only that, they would get away from me. Which, of course, 5-6 years after the introduction of Google Glass, everybody's kind of doing that now anyway. Whether you're doing Facebook Live, whether you're on Pinterest, whether you're on what's the other one? There's several. Twitter has it.
Instagram.
Well, Instagram, Snapchat, no question about it. But the free giveaway of information that used to be so harbored privately is.
I was talking to a friend yesterday, somebody that you know as well, and he had gone to a consultant. The consultant said, "Hey, look, Facebook is no longer hip. It's not. it's old. It's dead. It's not for the young people and this and that." So, and I said to him, I said, "In your business, are you trying to reach any young people?" He said, "No, not really." I said, "Then why do you care?
Why do you care?
If you're marketing to 30 plus, right?
Right."
We're still on Facebook. I'm still on Facebook. We're just getting to the live thing, right? If you're not trying to market to anybody 30 and below, who cares if it's dead to those people?
The funny thing is,
consider the demographics.
I agree, and everybody wants to bury the latest, greatest and get on to the newest, best. And a company like Facebook isn't going anywhere with 2.5 billion people. Even if 500 million people are fake people, there's still 2 billion people using it worldwide. These people aren't going anywhere. A third of the planet's on this thing. And it's the only place, really, that you can instantly and quickly, with a circle of friends, contact everybody and let them know what you're doing. I can't keep up with 100, 150, 200 people a week, a month, a year. It's just impossible. So this is the only way you get to do it.
Yeah, it's crazy.
Yeah, it really is. Okay, so talking about different buyers, and I wanted to get to it just quickly while we have a couple of minutes left. Buyers themselves, who are they, what are they doing, and the different demographics of buyers. For instance, we have millennial buyers, as we've talked about many times on the show. We have baby boom buyers that we've talked about many times on the show. And actually, most of your baby boomers are probably sellers at this point, having purchased many years ago, paid off their mortgage or in the process, and either are downsizing or selling their house to use that money for retirement for whatever reason, right?
Yeah, if you want to go another couple of minutes, you can.
No, thank you very much.
I just thought I'd...
No, I like that. Now the producer's telling me I get 3 minutes. That's very good.
I'll offer that up to you.
No, I really appreciate that. So, millennials, let's talk about them for a second and why they haven't really bought into this particular market as the way baby boomers of a previous generation have. There's research out there that talks about the way employment is and how it's quite a bit different than it was 20, 30 years ago, where you would go to work for a company and you would work for them for a long time and they'd give you a gold watch at the end of your service. But you would use that security of a paycheck in order to go get a mortgage, in order to make long-term commitments to both your family, the community. I had a guy on my on the show the other day, on the Las Vegas real estate show, who was saying that the reason we have poorer neighborhoods in certain areas is because they lack the cohesiveness of long-term stability, i.e., people working for a company for a long time, people investing in mortgages, i.e., millennials aren't necessarily those type of people. So this is why you've seen the decline in urban neighborhoods all across America for whatever reason. I argued with him that, the demographics, yes, do speak to that, but there are other issues at stake here. And the way that we're building communities are online today, not necessarily in your neighborhood.
From a business standpoint, there's a lot of areas where supposedly the cavalry is coming, but it's going to arrive too late, right?
Yeah,
I was talking to a friend
agree.
today that's in New Mexico that has a business there, and they're going to build some sort of a plant there, but in the meantime, there are 5 businesses that are closing over the next 6 months.
Right.
And the plant won't be there for another year or two. So some of this infrastructure buildup that may be coming back to industrialize the area is not going to make it in time to save some of the current businesses.
Well, this is what's happening. Let's pick Los Angeles with the football stadium coming in, or let's pick Las Vegas with their football stadium coming in. Both areas that are served by the show, they are looking at very similar things, where you have local businesses that have been there for a long time, but they got to put up with bad traffic, no parking, inability, construction, loud noise for 2 years, maybe longer, to survive, to be able to get to the promised land.
Yeah.
Some will survive, some won't.
Correct.
Okay.
Yeah.
Darryl, thanks for jumping in. I really appreciate it.
Pleasure.
Okay, and I'm Jeff Barton. I'm your host for the Las Vegas Real Estate Show, and you can see that show at channel 26.2 on your dial out in Las Vegas. And I'm your voice for the Mortgage Group and the Mortgage Voice here in San Bernardino, Riverside. Thanks very much for listening, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.